All right, let's dive in. Today, we're going to pull back the curtain on the U.S. financial system, and we're not going to look at it as just a bunch of random events. Instead, we'll see it for what it is, a deliberately designed structure, an architecture really, that decides how wealth is created and where it flows. So let's kick things off with this really powerful idea. Wealth in America? It's not just about getting lucky or even just working hard. It's about understanding and navigating a system that was intentionally built. That single provocative thought is really the foundation for everything we're about to explore.
So the big question is, what is this architecture? What are its foundations? What are the pillars holding it all up? We're here to basically map out the entire blueprint, piece by piece.
Every big structure needs a solid foundation, right? Well, for the entire U.S. financial system, that foundation is the Federal Reserve. You hear the name the Fed thrown around all the time, and that's because its role is just monumental. To put it simply, the Fed is our central bank. Its main job? To manage the country's money supply. That means it basically gets to decide how much it costs to borrow money. For everyone. I mean, from the biggest corporations on the planet, right down to you and me. And this is where the Fed's decisions really hit your wallet. See, when they set low interest rates, borrowing money becomes cheaper. Think lower payments on your car loan or your mortgage. That gets businesses excited to expand, and asset prices, like stocks and homes, tend to go up. But when inflation gets too hot, the Fed flips the switch and raises rates. Suddenly, credit gets tight, the economy slows down, and the cost for every single dollar you borrow goes up. It's this constant, delicate balancing act that sends ripples through the entire economy. Okay, so we've got the foundation set. On top of that, we have the main pillars holding the whole thing up. Banks and capital markets. These are the channels that actually circulate all that money through the economy. So let's break down these two main pillars. First up, you've got your commercial banks. Now, when you deposit your paycheck, that money doesn't just, sit in a vault somewhere. The bank puts it to work, funding loans for mortgages, for small businesses, for car purchases. It literally transforms your savings into the fuel that makes the economy run. Then, the second pillar is capital markets, what we usually just call Wall Street. This is where big companies go to raise money directly from the public by selling tiny little pieces of ownership, what we all know as stock. And this is such a crucial point for most of us. You might not be a day trader, glued to a screen. But if you have a 401k or some other kind of retirement account, guess what? You're an active player in this pillar. Your savings are out there, invested in these markets, harnessing the incredible power of compounding to grow your wealth over the long haul. Now, for this entire structure to actually stand and not just collapse, it needs a framework of trust, and, just as important, a framework of rules. Because without it, the whole system becomes incredibly unstable and fast. And we all saw exactly what happens when that framework fails back in 2008. The financial crisis was just a brutal, painful lesson in what happens when risk is allowed to run wild. The collapse of these huge institutions showed everybody that without strong rules and real oversight, the entire architecture is vulnerable. And that's what led to much, much stricter regulations afterward. This quote right here really captures the essential lesson of that crisis. The very same tool, leverage, that can supercharge growth can also amplify a collapse. It's this permanent tension in the world of finance, and it takes real discipline and foresight to manage it properly. Okay, so we have our foundation, we have our pillars, and we have the framework. Now let's talk about the engine that powers the whole thing, credit and corporations. The fuel for this engine is a concept called leverage. Now, it sounds complicated, but I bet you already understand it. If you buy a $500,000 house with, say, a $50,000 down payment, congratulations, you're using leverage. You are controlling a very large asset with a relatively small amount of your own cash.
Corporations do this on a massive scale, and they generally raise the money they need in two main ways. They can sell stocks, which means they're giving you a tiny piece of ownership in the company in exchange for your cash. Or they can issue bonds, which is basically them taking out a giant loan from investors that they promise to pay back with interest. You see, this whole system is really a symbiotic relationship. It's a two-way street. Companies desperately need capital to invent new things, to build factories, and to hire people. At the same time, investors, and that's everyone from giant pension funds all the way down to you and me, we need a place to put our money to work so it can earn a return. And that brings us to what is maybe the most important part of all of this, your place in this massive structure. We've looked at the big picture, but how do you actually fit in and connect to tangible wealth?
Well, one of the most common and powerful ways is through real estate. Property, whether it's your home or a skyscraper, is a physical asset that is deeply woven into the financial system. For an investor, a building isn't just concrete and steel, it's a balance sheet. Its value is determined by the income it can generate, literally turning physical architecture into financial arithmetic. So, how can an individual navigate all of this successfully? Well, the most effective strategies are pretty much the same ones the big institutions use. First, diversify your investments. Don't put all your eggs in one basket. Second, think long term. Think in decades, not days. And third, reinvest your earnings to let that magical power of compounding really take off. And this is without a doubt one of the most vital takeaways. Building wealth inside this system is almost never some kind of get-rich-quick scheme. It's a disciplined process. It's gradual. It's systematic. It's about patiently letting your money compound on itself over time. So there you have it. The U.S. financial system is this deeply intertwined ecosystem of banking, markets, and rules. Its greatest strength is its incredible scale. Its greatest vulnerability is excess. But by understanding its architecture, by seeing its deliberate design, you are in a much better position to navigate it. So we'll just leave you with this question. Now that you see the design, how will you build within it?